Some trading this morning with Alan Nuttman, Chief Market Strategist at Bullseye Options. Looking at Pinterest again. Alan, welcome back to the show. So Pens is having some trouble here, holding it together above 40 bucks. Right now, 42.95 is just a small thread below the previous lows from November.
Exactly. And so what we're looking for, and it's hard to find, stocks that are bad enough to buy after this obvious big bull run burst. You've got to find some of these laggards, and this is definitely a stock. It's 50% off its top, and if you compare it to the rest of tech, it's down 30% in 2021 versus the NASDAQ up 30%. So from a value standpoint, we've done this before. If you look at Micron a couple of weeks ago when we talked about it was bad enough to buy, and it had a big bounce. So it's as much the strategy, buying an option, buying some time, buying in the money, and as it is the stock.
All right, so Pinterest down 3.3%, but you're flirting here with the breakdown, Alan, is that of support kind of getting violated a little bit, but I guess maybe you have to wait. You know, we draw those lines with a thick marker, not a thin one, I suppose.
Right, and what I look at is I look at things on a weekly basis. So what we're seeing today, violation of that support, we've been between 45 and 50 for a month. That's significant. A breakout there gets 55 and then gets us started. I'll talk about that in a second. But you want to look at things on a weekly basis. And more importantly than that is the fact we're making new lows, annual lows, but we're not making new highs in volatility. So this could be a last gasp by the shorts. And that's the way I like to play it. So the play is a long-term February option. So February option's got plenty of time. The February $40 call, it's got that strike down below this support level. I think it's trading for about 6.25 right now or so. Plenty of time. I said 7 or better. So I always put in or better prices. So what I'm saying is I'm giving a top end limit for what I'm willing to pay, but obviously I'm going to buy it at a lower level if the market's going to give it to me. So it sets up for a 70% delta, 90 days of time. And what's important here is if nothing happens for the next month and it sits in the same area, then you lose about $1 of time value. So it's all about probability, controlling time, and being in position for success if and when a bottom gets built.
All right, so $47 break even here. I think you're one of the more optimistic Pinterest traders, maybe the only one that we've had on recently, Alan.
Right. Well, hey, I'm just a chart guy, and this chart is very attractive to me. This sideways, this test of this low, if we can get it to test and reject, then you're going to see some profit taking. And there are some gaps up above. There's a gap between 50 and 57. Now, 50 is a magic number for this stock. The stock has gone from 10 to 90, so it's a halfway point of this action forever in Pinterest. So who knows what they can pull out of their hat. But, you know, you've got 90 days for this to get better. Maybe just out of pure value, it drifts higher and fills in that gap. Now, if it gets up to that 57 level, this option is going to more than double in value, and that's what I'm looking for. Is I got a chip down on some stock that suffered, and like I said, we've done this in GDX before it made its bottom base. We did this in Micron before it made its bottom base. So this has been successful in the past, and you're trying to find pockets of opportunity that haven't participated in the market, and I think there's more risk-reward potential on the upside in this stock than on the downside.
Okay, Pinterest down 3.3%. I will say, Alan, to your point, you'll zoom out a little bit for a couple years, and last year on the way up, it does look like this $43 area was pretty important, where we saw a period of a brief consolidation for a couple weeks in October before it really ripped into the 50s after its earnings in the last quarter of last year. So if it doesn't hold up, I guess at least you know when the levee's breaking. At what point do you bail on this if it does start to slip further?
Well, I've got a February option, so I use options so I don't have to be as precise. You can ride through the ups and downs. And the key for this strategy is you've got staying power because these are in-the-money options. I've got the ability to be long, the right to be long from 40, which is lower than it's been in a year. So I'm not upset about that, but mathematically, I always use the same money management. If an option gains 50% in value, I sell half my positions. If it gains 100%, I sell the second half. On the downside, if an option loses half of its value, either the market's gone the other way or you're running out of time. And those are the two key components that that hurt options traders. So we'll see, but you can put a stop loss at 50%. You buy an option for $600 and it gets down to $300. The chances are it could come back, and options very much do. Micron came zooming back from being down, so anything can happen. But you have limited risk, and that's the key in the strategy. No matter what, the $600 option can only go to zero. That's it.
All right. Alan Uckman, thank you, sir, for the bullish Pinterest trade. Just the charts, not a fundamental take. Okay. Alan Uckman, Chief Market Strategist at BullseyeOption.com. When we come back, let's talk some tech. Let's talk about a company transforming to cloud recurring